Benefits. I'm sure everybody wants benefits, right? Can't wait to get them. If you've already got them as a CSUSB faculty member, say you're a lecturer, they're going to just continue as they were, no change. Or if you're coming from another CSU, there should be no change. If you are new though, you'll find that we do have a number of affordable HMO and PPO health plans through Calpers. They are the administrator for our health plan as well as our retirement plan. So how do you enroll? There's a benefit enrollment worksheet, and we have a new way of receiving documentation. There's a new tile under Collaborate in My Coyote, and it's called Move It. And you can upload your documentation securely to us directly, so there's no interference from anybody outside. All we ask is that you log in through your My Coyote portal and then upload your marriage certificate, birth certificates, whatever it is that we require for your dependents. If our office receives this worksheet before September 30th, then your health, dental, and vision will be effective October 1st. I'm going to also forward this presentation to Josephine so that she can share it with you all as well, because I do have the links throughout the worksheet for all the different worksheets and information. One of the best ways to determine which health plan you might want to choose is looking at the Calpers Health Program Guide on their website. It has a side-by-side comparison of all the HMO and PPO health plans so that you get an overview of how much your co-pays will be. Most of our co-pays for HMOs are $15 and our PPOs are $20 or $35. But it depends on the plan you're choosing and if you meet certain criteria for picking primary care doctors. This is just an overview of the differences between an HMO and a PPO. I'm not going to bore you all. Just know with an HMO, you do have to pick a primary care doctor, generally with a group that is assigned with a specific hospital. The PPO organizations don't require you to necessarily choose a preferred physician, and you get a network of doctors, could be everywhere from UCLA, USC, Loma Linda, but it allows you more flexibility. But of course, with more flexibility comes additional cost. Like seeing a specialist with an HMO, you're going to have to get a referral to see a specialist. With a PPO, you may not need to. And then with an HMO, you basically pay your copay. PPO, depending on if you go to see a specialist and if they're covered in network or out of network, that copay may be higher than you think. Here's the cost for the office visits. As I was mentioning, it's about $15 for HMOs, $20 to $35 for PPOs. The pharmacy is pretty standard between HMO and PPO plans, and they both have a mail order supply that you can send away and get a 3-month supply for the cost of 2. So here's page 1 of the rates. Unfortunately, I lost page 2 somewhere in my presentation, but they are on the HR website, and the health rates, well, that says 2017, the 2020 health rates are on the HR website. 2021 rates should be coming out shortly. Open enrollment starts in September. Unfortunately, whatever plan you're choosing now, you're going to be stuck with for the next year. So choose carefully. Hopefully you'll take advantage of using the websites that we've provided on the rate sheet. And if you're not sure if your doctor's covered, call the plan. Don't talk to your doctor's office, because they'll say, oh yeah, we take HealthNet, but they may not take HealthNet SmartCare. Okay, I don't want you to get stuck having to change doctors if you don't want to.
Lisa, there's a quick question. they have
Sure.
their paperwork already signed, do the benefits start September 1st or October 1st?
October 1st, and because I don't think you're getting an August paycheck, and to have benefits begin, you need to get paid so we can make the premium payments. The CSU contributes the majority of your premium for health, and we pay all of the dental and the vision. But without a paycheck, we can't begin the benefit.
Okay, thank you.
You're welcome. We offer two different dental plans. There's a Delta Dental PPO and Delta Care USA DMO. Both are completely 100% employer paid benefits. There are some similarities and differences between the two. They both offer 2 cleanings in a 12-month or calendar year from January through December at no cost to you. However, with the Delta Care DMO plan, you will need to choose a dental office from a specific list, and you'll find that list on the website, which is on the HR website as a resource. Oops, sorry. Didn't mean to go there. Go back. Oh, forget it. Anyhow, the Delta Dental PPO allows you more flexibility. You don't need to necessarily choose a specific dental office or dentist, which gives you more flexibility. It covers 2 cleanings 100% in a calendar year as well. The differences start when you start to have some of those cavities filled or you need an implant. The Delta Care DMO plan does not cover implants at all, whereas the PPO plan will. But Delta Care DMO does not have a yearly maximum. The PPO plan has a $2,000 per year maximum, and that is per person. So if you have a family, that's $2,000 each of you will get for the year to cover your cleanings and any preventative or maintenance work you may have done. The PPO plan has deductibles and it has additional co-pays of 20%, similar to the medical plans that are PPOs, because they offer more flexibility. The Delta Care DMO looks really good on paper. It shows that there's no cost. There may be costs, so do not be fooled by the no costs. Any questions on the dental? Usually that's kind of a hard one to understand. No? Okay. VSP, which stands for Vision Service Plan. We offer a basic plan at no cost to you for you and your dependents. And it covers 1 eye exam per year for a $10 copay. If you go to one of their VSP providers, they tend to give you a little higher allowance towards your frames and lenses, but you have the option of going to non-participating providers as well. Non-participating providers are Costco's and Walmart's. So think of those optometry offices as in their plan. There is a list on our website that you can go to the VSP website to locate a participating provider near you. If you want more than 1 pair of glasses every other year or a pair of contacts every other year, there is a way to buy up to a premier vision care plan. It will cost you a little bit per month, but it's available to you in the first 60 days of being hired, and you can elect to send in an enrollment form to VSP directly. Make sure though, if you're going to be covering dependents like a spouse or children, that you're adding them onto that premier vision plan with you. If you don't, they will not have vision coverage. And a lot of people assume that they can just put themselves on this higher plan and not their dependents, and the dependents will still have the basic coverage. That is not true. So Please remember, if you're going to enroll yourself, enroll everyone you can. If you have other health or dental and don't need ours, we will offer you a flex cash option, which is if you have other employer sponsored benefits through a spouse and you don't want or need our medical or dental, you can waive having our coverage and we will pay you $128 a month to not have our medical or $12 a month to not have our dental. That's up to you and your significant other to decide which makes the best option depending on what the coverage is, the cost, and how it will meet your needs. But you must do this within 60 days of enrollment or you'll have to wait during open enrollment.
Lisa,
Yes.
question with regards to that flex cash. If we pay CSU medical coverage, the $128 flex cash per month we get, is this just cash or do we have to spend it on medical bills?
So this is just additional money that's added to your gross income and it's taxed. But it's also a safety net so that if you lose that other coverage, you can come to us and say, hey, I'm losing my coverage on August 31st. I need to get on medical. And we'll say, great, you're in flex cash. We can make that switch for you right now. And it'll be effective on September 1st. That way you're not losing any coverage.
There's a question from Matthew De Lorers. Matthew?
Hi, it's just a real quick question. How do we find our VSP account number?
It's the group number, and I think it's on our website.
Okay. All right, I'll check that.
We tried to put as much resources as possible out there for you, but the group number should be out there.
And another question, is our first health plan 2 months or 2 plus 12 months? October 1st to the end of the year or October 1st to December 2021?
So it would be October 1st through 2021, December 31st, 2021. Simply because open enrollment begins September 21st and ends October 16th. You're not going to have enough time to evaluate your plans this year to know if you want to change them for next year. Unless you opt to choose a plan and then look at next year's rates and decide, you know what, I can't afford that and I want to make a change. So what I can share is the majority of our health plans are only going up roughly 4% next year.
Good to know. Thank you.
You're welcome. So let's see, what time are we at? 4 o'clock. Before I get into this Tax Advantage premium, do we have any other questions about health, dental, vision?
I think I've heard the questions that they have. There's it's not about the health plans, but again about the documents. So it's everything can be done through Move It, right?
Correct. Move It is, I've been using this method with Chancellor's office for the last several years, and it's how we move secure information. So because you are in your My Coyote portal and it's going from CSU to CSU email, that's how it can be so secure. So you can upload the marriage certificates, the birth certificates, social security numbers, proof of residence if you're adding a spouse or a domestic partner, and we'll get it. We will reply back to you saying we received it. If there's anything missing, we'll also let you know. But hopefully you feel comfortable using the Move It. It's very simple to use, and we've created some simple instructions that we can share as well.
But if someone is not comfortable with it, they can just physically drop them off to also to HR by setting up an appointment, or you prefer that they do it through Move It?
We prefer that you use Move It, or if you have access to a photocopier, make copies of the original documents and mail them when you're trying to avoid contact. And I know I'm only in the office maybe once a week, and HR is only in the office about once a week. If you absolutely want to meet with me, then we can try and set up a time and a date to meet. And the building is locked, so I have to let you in. And we usually meet in the parking lot and walk in together.
Not in this hot weather.
Not in this hot weather. Of course, you have to wear a mask and maintain social distancing, and I will have hand sanitizer. So it's just, this is a different time we're in.
Okay. Any other I'm ignoring the chat, so I'm asking the questions on their behalf.
Okay, thank you, Josephine. So TAP, Tax Advantage Premium Plan, those rates for your health plans that maybe, could be several $100s. This is what allows them to be deducted on a pre-tax basis. And just so you're aware, we always enroll you with pre-tax whenever possible, unless you specifically don't want us to. Then all you have to do is write us a note or an email and say, hey, I appreciate you're doing the pre-tax. I don't want it pre-tax. Very few people have ever taken us up on that. And it's usually only if they have a very high cost plan, like First Care, and it's a family, and it may cost $1,200 a month, because that could impact your Social Security withholdings. That's the only reason. However, with this comes a 17-cent per month cost, and people will email and say, what's this 17 cents on my paycheck? It's what's allowing your health plan to be deducted pre-tax. So normally, another pre-tax benefit would be parking. However, currently no one's being parking on campus because we're remote. So it's not currently being deducted from your monthly checks. However, when we eventually do go back to campus and start parking again, you will be paying a monthly cost. That is also on a pre-tax basis. Pre-tax is a good thing. That just means that your federal and state taxes are taken on the lower amount after they deduct all of these costs that are pre-tax. Dependent care reimbursement account. So we do not have a health savings account. We do offer two types of flexible spending accounts. Dependent care reimbursement is for child care for children under the age of 13 or adult daycare needs. And it's a minimum of $20 a month to a maximum of $416.66. I just had someone that was trying to average out for the remainder of the year and gave me a $500 deduction. And I'm like, sorry, it's only $416.66. That's it. That's what state controllers allows. But this is a way to at least put aside, if you have a child between the ages of 0 and 13 and you know that they're going to need daycare, this is a way to put aside that money on a pre-tax basis. The downside is it's either this way or on your taxes. So you can only make that determination yourself and along with your tax person. This year, it's a little hard to know if you're going to have any child care expenses. But during open enrollment, starting September 21st, you would have to enroll in this account for next year. These two accounts, the dependent care and healthcare reimbursement account, do not automatically continue, unlike the health, dental, and vision. Those will automatically continue year to year unless you opt to make a change. These two do not. So you would have to apply during open enrollment for 2021. Hopefully by then, things may be a little bit more normal, but we'll see. So the healthcare reimbursement account is a way to put aside money for just that. You have, say you have those $15 office visits for an HMO health plan, and maybe you needed a dental implant, but your plan only covers $2,000 and the implant cost is $4,000. So that additional $2,000 for the cost of the implant could be used and paid up front on a pre-tax basis through the healthcare reimbursement account. There is a downside. If you don't use it all, the IRS says then you lose it. So if you're putting money into both of these accounts and you don't use them by the end of the plan year, and you choose not to re-enroll the following year, you have until the end of the year, December 31st, to file a claim for costs incurred for that year. There is a grace period until March 15th, and you can still turn in your claims by June 30th, but only if you re-enroll for the following year. A lot of people get stuck with this, so I'm just letting you know. Be careful, be prudent when you're trying to determine if this is going to work for you. So some additional things you should know: you do earn sick time and a personal holiday. We do get some paid holidays during the year. If you need a leave of absence, maybe you're expecting a child, you'll come see me or email me and I can send you information about that. If you need family medical leave, you'll have to have at least 12 months of state service. So if you've worked for another CSU, that can meet that requirement. Military leave, that's a little bit more involved. But jury duty, yes, we do need to serve jury duty, and we cannot accept their daily payment. And bereavement, if you lose somebody, you should get 5 days of paid leave. Disability leave. So if you become disabled and you don't have a lot of sick time on the books, there is something called non-industrial disability. You don't have state disability through the CSU. Unfortunately, for faculty, it only pays you $125 a week. But it's a way to continue benefits, and you may also qualify for something called catastrophic leave, which is where people can donate time to you to make you fully paid, hopefully, if you get enough hours donated. So all is not lost if you have not enough sick time, but you need to be out 6 months. We have ways of getting you through that. So hopefully none of you get injured at work, but if you do, you'll need to go through risk management and file a claim and fill out some information. Of course, we want to get you seen as soon as possible so that you can be evaluated, determine if you need treatment, how severe your injury may be, and if you're able to work or not. So please, if you are injured, let your department chair or whoever your appropriate administrator is know as soon as possible.
Lisa,
Yes.
there's a confusion, I think, on the paycheck. So the first paycheck would be for the work in September. When do they get the first paycheck? End of September, and will that include the work that they did for August 17 until August 31st?
That is my understanding. That is from Sandra and payroll.
Oh, okay. I will.
That
What
is from
is,
Sandra and payroll.
well, I thought that you, okay, I will ask that. What is parental leave?
So parental leave is if you are expecting a child or you're adopting a child, the CSU wants to provide some time for you to bond with that child. And normally they allow a 30-day paid leave, which is 6 weeks. So for moms, that pretty much allows them to have some time to recover. For dads, there's a little bit more flexibility. They can either take a time-based reduction for the semester of, I think, 60%, or they can take this 30 days. Now, because you're teaching, sometimes it's a little hard to take time off, which is why that time-based reduction is usually more popular among dads. But moms don't have as much flexibility since they're recovering. So they usually get the 30 days and then they supplement their time with their sick leave or using the NBI.
With regards to that, what kind of leave will you take if for sick parents, and how many days is that?
So sick parents falls under something called Family Medical Leave Act, which is an unpaid leave, and you would have to use your own sick time to continue paying you while you are off for those hours or that time. And there's a request form, a doctor's certification form, and you would have to be qualified for family medical leave, meaning having at least 1 year of CSU or state service.
But if the sick parents are something to do with the COVID, or is that still FMLA or something else?
If it's COVID-19 related, that is something else. But you'd have to check the contract, and I think you can use sick leave and that parents are covered as immediate family.
Okay.
But when it comes to the faculty and the COVID-19 leaves, that is something the Faculty Affairs is handling. I'm handling students and staff.
Okay. So we'll ask that from Sebal then. Thank you.
Yes, Saval or Eric can answer those questions better than I. So are we good? Okay, so you will get a $50,000 life insurance policy paid for by CSU with a $50,000 accidental death and dismemberment rider. This is the beneficiary designation form for that employer paid insurance, and I encourage you all to complete it and mail it directly to the standard, but also keep a copy in a file somewhere. Voluntary benefits, we have a bunch, but I'm just going to highlight these. California Casualty offers home and auto insurance, and they will deduct it from your monthly check. So hopefully you're not getting that twice a year big balance due of $650 or $700. They do have renter's insurance, boater's insurance, you name it, they've got it. The nice thing is they're employee owned, basically. And we've had a relationship with them since I started back in 1998. If your car is vandalized on campus, they will waive the deductible. And they're very, very high attention when there's we've had the fires, Sonoma had the fires, they were right there calling our employees that were being affected. They take care of you. They care about you. So give them a chance, see if they can meet or beat what you may have already. The MetLife MetLaw Hyatt Legal Group Plan. This plan will cost you $21.70 a month. It allows you access to attorneys across the United States for everything from estate planning, trusts, to court hearings. However, the attorneys may charge you some additional costs depending on how often they need to go to court. The only thing it really won't cover is divorce, and that's just because it's a little tricky for divorce attorneys. If you're not happy with the attorneys that they have in your area, you can locate your own attorney. You will have to pay upfront for the fees and then submit a bill to them. But I've seen some of our employees do that. And this is something that if you do not opt out of during open enrollment will continue year to year. So some people only want it for a year, but then they forget to cancel it. Don't forget to cancel it. The standard offers life insurance, accident, critical illness, and accidental death and dismemberment. This is voluntary. So if you wanted to purchase additional coverage for yourself and your family, this is a way of doing that. I did not put disability since you already have a disability policy in place for you that is paid for by the CSU. There is a 6-month waiting period though with that. With the life insurance, if you decide to enroll in the first 60 days of employment, they will guarantee you $150,000 for yourself and $50,000 for your spouse and $20,000 for any children. And that's regardless of how many children. If you wait beyond that 60-day period though, then they're going to make you complete a medical history statement and you may need to do a blood test or some other type of health screening. The benefit hub, that's the fun one. That's just discounts on hotels, restaurants. Hopefully we get a chance to go back and travel and experience some of these restaurants that unfortunately we can't right now. How are we doing on time? 4:20, okay. Savings plans, TSA, 401k, 457, these are all additional ways to add supplemental retirement savings to your Calpers pension. They're separate from Calpers and they're your own money. The state will not contribute or because we are already contributing roughly 31% towards your Calpers retirement each month. But it's a way to set aside pre-tax dollars or if you choose a Roth after-tax dollars for retirement so that you can say if you want to retire at age 55, you have the ability to do so. The links will take you directly to their pages. You can enroll online for both of these programs. Just realize that your ID number with your benefits is always your social security number. Your My Coyote ID number is only on campus. The Scholarshare College Savings Trust is for children that you want to save money for them so they can go to college. And that is through TIAA-CREF directly. If you decide you want to do it through payroll deduction, there's really no benefit. It's not pre-tax. And the state controller's office, I think, will charge you 30 cents a month to process it. But that is a choice.
We will have insurance.
Question? Okay, so I know that Sandra touched on pay stubs. I just want to reiterate what she was saying. The Cal Connect, it's really important the first 3-4 months to look at your paycheck every month to make sure those deductions are showing up. So your health insurance, your dental plan, your vision plan, all that column on the right side there under federal tax, state tax, those are all your deduction amounts. And on the lower left, it says employer contributions. That's how much the CSU is contributing towards your retirement, Social Security, your health plan, your dental, vision, life, and your Medicare. If you're not seeing your health care premium, and maybe you only paid $4 a month or $20 a month, but if you're not seeing that showing up, it's really important that you let benefits know because something might have happened. We don't have a perfect system, unfortunately. So don't let it go too long because I really don't want you to have to pay hundreds of dollars to the state of California if you have a high cost health plan. Plus, we want to make sure we get it corrected as soon as possible. And given the fact that everybody is currently working remotely, it's a little bit more difficult getting things done. So, how can you contact benefits? Email us or call us. One of us will pick up the phone Monday through Friday, 8 to 5. Benefits at CSUSB.edu is really a good way of, if you have questions, because all of us will access it and forward it on to whoever can best answer those questions for you.